What's going on, Bat Fam? Welcome back to the Builder Trader YouTube channel. In this video, I'll be doing a weekly market analysis video. If you're new to the channel, in these videos, I cover the medium and high impact news events for the upcoming trading week, as well as do some technical analysis on the pairs that I trade. Before we dive into things here, I just want to mention that these are weekly analysis videos and that when I analyze these, the market is not open yet. So obviously, throughout the week, there's lots of volatility and market movements. If you want daily technical analysis on these pairs that I'm covering, join my free Telegram channel. It's in the description of this video and all my other videos. I'm also creating a Discord channel for you guys, so stay tuned for that, Bat Fam. And if you're not already following the Instagram or Instagrams, Build a Trader and Bat Signals, go ahead and do so. Those are in the description as well. So let's dive in here. There's not too much news on Monday. On Tuesday, we have some high impact news. We have consumer price index, core CPI for the US dollar at 5:30 during New York session, and CPI is consumer price index, and what that basically measures is the cost of consumer goods, and that correlates with inflation in the economy in that country, in this case the United States. Later that evening, we have a Reserve Bank of New Zealand interest rate statement. That's going to cause some volatility for the New Zealand dollar. On Wednesday, we have producer price index. We have Bank of Canada monetary policy report, as well as an interest rate statement, both during New York session. So expect some high volatility during New York session Wednesday. Yeah, I'd be very careful and very cautious on these trades and even trading that day. But just trade in the momentum of the market during that time and you should be fine. And manage your risk, of course. And if you want to know what to do, join the Telegram. It's free. Thursday, we have Euro main refinancing rate and a monetary policy statement. We have a European Central Bank press conference at 5:30 during New York session, and that is all the news for the week. On Friday, there is not really anything going on. So let's dive into things here. We're going to start things off with the NASDAQ 100. And like I said, if you're new to the channel, the pairs that I cover are the NASDAQ 100, the US 30, which is the Dow Jones, USD JPY, USD Canadian dollar. I cover gold and oil. So let's dive in here onto the NASDAQ. Okay, if you watched last week's analysis and also my most recent daily analysis on the NASDAQ, the market completely went the opposite direction that I thought and had analyzed, which is completely fine. But here we are. We rejected here at this level, creating a double top type of pattern. Depends how you really want to look at it, but this was just a strong area that we couldn't break above. And as a result, we broke this higher low point that was formed to try and continue this bullish momentum that was forming as such. So really it should have went like this, came down higher low at some point, continue higher, but that didn't happen. As you can see, the market, instead of pushing higher, broke this level and continued lower. Excuse me. This is Red Bull, you know. Early in the morning here in Seattle, gotta make this video for you guys. Care about my Bat Fam, you know. So, alright, we have this low point here that we just made. There is a point of support that is broken here, which is also market structure. This is the previous low point. I'm going to make this as a zone instead. This is the previous low point. As you can see, we're in this point, and it's a strong bearish candle with lots of bearish momentum. So to me, this indicates that we should continue lower down to the 14200 range price level, and we may get a reaction from there. The market could react from this level and retrace, creating another lower high, and then continue to make another lower low point. However, given that it has closed in this strong bearish, let me back out real quick. Given that it's closed with this strong of a bearish candle, we should just get a wick, a slight pullback, continuation down. And where this level is, the 14200 range, is a previous level of broken market structure. This level broke, and that's what initiated this breakout move. Well, actually down here, but this was the major point, and that's what continued the momentum. So now that we're approaching this region again, there is going to be a reaction. However, if this level breaks, we're going to come down lower. How I have these black arrows. However, we could come down all the way to the previous point of market structure that it originally broke out from, which the market tends to do that very frequently, coming back to the original breakout point to continue with the overall move after a correction phase. So at that level is 13800, and from there we could get a reaction and break some type of structure over here, and then keep going up in the overall bullish direction. But we'll see. It's a little too early to tell, but on Monday I am expecting some bearish price action given how we closed last week. I'm gonna remove these arrows. Next pair, US 30. So I did not touch this analysis from last week, or this chart, and this analysis is the same from last week. We can see that we had a pullback. Price tried to break this resistance level here, but it ultimately didn't. It rejected. It did not make a higher high, or at least yet. So I'm gonna go zoom out to the daily time frame. Actually, we're gonna go to the weekly time frame. So we can see here there was a rejection here. This kind of looks like a lower high point for that formed off this area. However, this is not the strongest bearish close. This is a bearish candle, but as you can see, there's a top wick and a bottom wick. There's some major indecision. So I'm going to go to lower time frame on the daily here. It does look like we are creating bearish market structure, given that we're creating lower highs and lower lows. In theory, this next move, if this is a lower high, it should create a lower low and either come down to this level, 341, or down to 33250. Something like this, but let me update these levels real quick to give a more accurate analysis. There's also a level here where the zone is. So I'm going to go down to the 12-hour time frame. And yeah, we can just see a clear bearish trend. But this level right here where the zone is and this blue line, this blue level of support, this could be seen as a possible double bottom pattern. If you look at it like this, correction phase, but here, and then continue higher. I'm gonna remove this arrow. Okay. So that bearish situation was a possibility. This bullish situation is a possibility. But this move is dependent on this area breaking where this blue line I just drew is. If price comes up and breaks this blue line right here, it's going to initiate a breakout move up to 35750, 35700, around that range. And because this would be a broken level of market structure on the 12-hour time frame, because it broke its previous lower high, which means that if a lower high breaks, it just made a higher high, and what's next is a higher low and a higher high, so on and so forth. And if you're unfamiliar with that, watch the market structure and time frame correlation playlist that I have for you guys. But yeah, that's really what I see so far. Right now, it's in a bit of an interesting area. If I were to take a trade or look for any positions on here, and I'll go ahead and update this in the Telegram group every single day this week, Monday through Friday. So if you want to see updated analysis on this, join the Telegram channel. Yeah, on a break of this would be a very nice impulse move or impulse breakout trade. You either target here, this previous high, or target the next major key level here, which is 35,700, 35,750, around that range. But yeah, this doesn't look like a bad setup at all, and neither does this. These are both very possible situations. However, given on the opposite side of this, if this level breaks 3430, 3450, 34350, it's going to just continue down lower and try and fill this lower area market structure. So the fact that we got a strong reaction off this level is a good thing. So I would say bullish for US 30 still, but it depends on if this level can break or not. Next pair, USD JPY. Now on UJ here, it's been pushing bullish for quite some time now. However, I'm going to start on the daily time frame. We can see that it looks like this candle closed above these previous candle highs and where this resistance is, this black line. However, if I drop to a lower time frame here, right on the left side on that previous daily time frame we're just at was just wicks. As you can see here on the 12-hour, it's full candle data. And as you can see here, we never closed above this area or above this zone, which means we did not make a higher high, which means this high is in theory lower than this high. With that being said, that doesn't mean the market has reversed. It could mean that it's starting to, but it is dependent on one thing here. If the market does not make a higher low from around this region here at 12350, 12360, where these technicals are at, and try and rebound and either break this high and continue higher, if this does not happen, then it's going to be bearish. We need to get a higher low point from this point here at 12400 or to the 1236 range. If that breaks, this whole area right here breaks, the market's going to come down and fill and drop to 122.4, 122.3 area. So this market structure needs to hold and create a higher low point in order for the market to continue bullish. So that's what I would say, but based off of the time frame that I just showed you, this is a strong area of resistance and exhaustion, so we need to break above that with some momentum. So I'd be looking for buys down on these levels here, and I'd be looking for sells on the break of this major level over here. So if we get a nice reaction here, buys from this level of this area, something like this. This would be ideal. And if this level breaks, this would be an ideal move because it should just drop and fill all the way. But we'll see what happens with that. Next pair, USD CAD. Now USD CAD looks like we created a double top, and we should see a correction down to this level here at the 1252 area, and then try and retest these highs or break this level of resistance and continue higher. Something like this. And then continue with the next leg up perhaps. But that's dependent on if the market can respect this area and create a higher low. But I still see CAD as being bullish. It's had a bullish breakout last week. I mentioned this trade in the Telegram channel. It broke this consolidation area. One could see this as being an inverted head and shoulders, a triple bottom, double bottom, whatever you want to see and say. But this is a reversal pattern. It broke this level of structure here, which is the main important thing. Not necessarily how it reacted down here, but how it broke these highs. This initiated the breakout move. And if you were looking at the lower time frames, you could find a lower level retracement where those wicks just were, where these wicks are. This would be a pullback, a retest of a minor level of support. I'm going to change this zone. Actually, we don't need a zone at all. I'm going to make an arc. Right in this area, though, was a minor level of support that the market needed to respect, which was also market structure. As you can see, this is a double bottom type of pattern on the 1 hour. If you don't see it, boom. Double bottom, broke the resistance to make a high. The resistance right here. Broke this previous high, and then initiated the breakout to the upside. A double bottom is a reversal or a continuation pattern. Watch my intro to candlesticks and key level video if you're not sure what that is. On the 30-minute time frame, you can see it's definitely a clear double bottom. However, this level broke. This level right here, L12575, needed to hold in order to continue the bullish trend. We just broke. As you can see, we're making lower highs and lower lows right now on the lower time frame, not the higher time frame. Don't get it twisted. It's important to know how to correlate your time frames to understand what's going on the lower level and the higher level. So what should happen is just Just a retracement down to these major points, and then a continuation. That's what I see. USD cash should be bullish for next week. And especially that we have some Canadian dollar news on Wednesday, I believe it was. We should definitely see some volatility there and a nice bullish move to the upside. Next, we're looking at gold. So I'm going to start things off on gold. This is the analysis I had marked up from last week. I said that if this level broke, gold is going to drop. We did not break at all. In fact, it held very strongly, which is a good thing for gold, which means gold should be increasing in value. Gold looks pretty bullish based on how we closed and the fact that it didn't break this support level at 1920. That's pretty huge. So we're going to go down to the 12-hour time frame and get some more details. So as you can see, gold is breaking this high right here, this area of resistance, where it's been consolidating in for a little while. But as you can see, there's been some major wick rejections here, creating higher low points, and resistance has been broken on the lower time frames. So I'm going to drop down to the 4-hour. The fact that this resistance is broken is indicating that lower time frame structure has been broken, making higher highs and higher lows, indicating that we should continue higher. The fact that the market has closed such strong bullish candles with full volume and not really any wicks indicates that there should just be a continuation since there's a lot of bullish momentum. So we might just tap off this level at 1945 and continue higher up to the 1970 range. And if it ends up breaking that high, then could go up to, could go up even higher to the $2,000 an ounce range. However, that is dependent if we can break this area right here where this zone is. If the market can break this high at 1960, then there should be a lot of momentum to continue higher, but that has not happened yet. But there should just be an overall continuation, a bullish continuation with gold. I'm going to adjust this level based off the higher time frame. Yeah, I would watch out for 1960 on gold. That's where we should be pushing bullish to. And if on a break of 1960, it's going to initiate a much larger bullish move to $2,000 an ounce or so. There may be, yeah, like I said, a pullback 1945. There could be a steeper retracement down to 1935, $1,930 an ounce. But gold is looking pretty bullish to me, so might call some gold signals this week. Join the Telegram. Lastly, U.S. oil. So U.S. oil has been following literally my analysis week after week after week. If you've been watching the analysis, oil's been spot on. So we did end up filling this major level here at $95 a barrel. I did show this last week. As you can see, we got that pullback, but we didn't end up pushing bullish quite yet. It looks like that move is forming. This level is not broken yet, the $95 a barrel range. However, if this level breaks, if 95 breaks, it is going to fill down to 90 to 88. But given the fact that there has been, I'm going to remove these arrows, and this risk reward tool, this could be a potential trade setup for next week, but we will see. I'm going to remove this. So we have a resistance here at this lower high point, which is also lining up with the previous market structure. We have multiple wick rejections here. This could be seen as a 3-pin pattern. If you're unfamiliar with the 3-pin pattern, it looks like this. Well, actually, I'm not going to have that. There's 1 pin here, 1 pin there, 1 pin there. Okay, it looks like it's carving out a low point. So I'm going to add this arc on all of them. But as you can see, it kind of looks like it's carving out something, right? It kind of looks like it's carving out a move to try and go up, as you can see. The wicks will give you a major indication of if something is being supported or held or rejected. So always pay attention to the wicks. The wicks are very, very important. The exhaustion says a lot. So yeah, there's been a lot of indecision down at this level. We couldn't break. This indicates to me that the market is going to try some type of bullish move. Now, a good setup like this would look like something like such. There would need to be a breakout of or break of this lower high slash resistance, which it looks like it is. There was a little bit of rejection, but it is going to attempt again this week coming up on Sunday slash Monday. And if it does end up creating a higher low point, so it might come down like this, try and test this area here at $96, $97 a barrel, and then try. If it breaks the $98.50, $98 a barrel, that's going to initiate the breakout move that I'm seeing up to $100, $103, $105 a barrel range. So let's zoom out. Yeah, this looks very realistic for oil, but it is dependent on if this level can break, because this is a pretty strong area. This is the previous point of market structure, and then this is the current point of market structure and resistance as well. But given the fact that we have created this wick here on the higher time frame, created a higher low here, another higher low, and created a higher high, we should just continue bullish in my opinion. So watch out for these price ranges that I have just mentioned. Join the Telegram if you want updated analysis, technical analysis on these charts every single day, and signals on these pairs. Thanks for watching my video, guys. Don't forget to subscribe and turn on that bell, like the video, follow the Instagrams, join the Telegram channel, Discord channel coming soon. Peace out, Bat fam.